guys. Waiting for you guys to come on in. Join us for today's episode of Friends. I'm going to play Rachel.
I don't understand.
That's okay. You don't have to. You need to be smart.
Okay. Okay, we got people signing up here. What do we got going on? Pull up the rates, please. Did you see that we might have a president, Gavin Newsom?
That sounds cute.
Let's see how that goes, man. That's such a strange situation. So strange. Ooh, something's not working. Something's not working. Dude, our computer program isn't programming the computers.
Hit the on button.
Okay, so.
All right, who's there? You guys know the drill. Ask us questions about real estate. Ask us questions about mortgages, rates, process, guidelines. Our phone numbers are here, so you can screenshot it and let us know if you're interested in getting started. Or you can just go to the top and click on the link that says Get Pre-Qualified.
We've had some very interesting things happen from people that come in from TikTok. So I won't give any names, but we get people that's like, hey, Lee, I want to start this. And like I had one, hey, I want to start this. They filled out everything. They gave me all the documents. Awesome. Pulled their score, unfortunately, in the 560s. And they're like, yeah, but you said 580. I'm like, yeah, 580 is where it starts. It's not pretty loans. It's actually an ugly loan. The interest rate is horrible. The DTI is horrible. So the better move is to get everything rolling forward so you can get better than a 620 FICO score. So just because you think 580, that's the unlock. It's not the unlock. It is where I can start, but even then, it's not going to be a pretty loan. If you're in 600s, it's a way better loan. 700s, way better loan. 800s, you're gold. You can do whatever you want. So as we're going through the process, I actually help the people get to the next level. I give them a couple of recommendations. I say, hey, you can go here. We have an online place if you don't want to talk to somebody. We'll give you somebody if you want to talk to somebody, or use your own credit repair person. But get your credit in line. It's very important to buying a house.
Very good. So what's up with Newsom? What did you hear?
Well, right now, so do you think Biden's going to run?
No.
You don't think so? So because it blows me away. It just floors me that people think that he's actually in charge. Because there's no way this man's in charge. There is no way this man's in charge. D-Vis, Duran with the heat shirts. Appreciate you, man. So there's no way this guy's in charge. There's just no, because I got no problem with him being maybe not aligned with me, because I don't think anybody's going to be aligned with anybody 100%. But I do have a problem with the champion, the most powerful man in the free world, not able to string a couple of sentences together without being able to talk. And there's a certain spot when you go, hey, listen, you've done your time. We appreciate you. Thank you. Here's a warm bowl of soup. Go take a nap.
Blanket. He needs a blanket.
And a blanket. Yeah.
So the special committee said that he was too old and senile to go through court.
Yes.
Okay? So, but the world heard that.
Yes.
His base heard that.
Yes.
So do you think they would vote for him?
I don't think so. I think even there's a certain spot where you go, hey, listen, yeah, this is not the right, this is kind of bad news. Yeah. Anyway, all of that does affect the buying of the houses. It all affects rates. It all affects, because the chairman of the Federal Reserve gets appointed, and they actually appoint them in 2-year offsets so that there cannot be retaliation in not too much of the government changes when the president changes. So the chairman of the Federal Reserve, Jerome Powell, was actually appointed, I think, by Obama and then recertified by Trump and then stayed on with Biden. So it's not like it's a political partisan thing, and I don't think it really would have a lot of pull anyway, because the economy is such a big deal. And the truth is, the Federal Reserve, oh my God, if you want to go down a rabbit hole, the Federal Reserve is not federal. It's a private organization. And there's a guy named Ron Paul who used to always say, we need to audit the Fed, and which sounds normal. It's like, hey, I want to see what your accounting looks like. I want to see your finances. We're not allowed to audit the Fed. We were not allowed to audit the Fed. So what? And I think it's because if you get behind the walls, too much stuff going on here. Too much. Cool. What do we got?
Eric, does buying a property in an LLC go against W-2 debt to income?
Take it.
So I have a question on that. So you're putting the property on title. That's what you're saying when you're saying property in LLC. But who's buying the property?
Mm-hmm.
It's probably Eric, the individual, or whomever he's talking about. And it's the money that Eric makes. So that's what I'm assuming, unless there's more to that, Eric. Is that correct? So if that's the case, that's why. Because you're the person that's being qualified and we're using your income. Now, are you saying that you have a corporation that makes money and you want to know why they want your income as well, your W-2? And it's probably because your W-2 flows through the corporation. So the corporation has money going out and they're like, oh, there's 50,000 that went out. Who is that? Oh, that's Eric. That's part of this income. So they're one and the same.
So let me give you Business 101 too. You are a person. You have a social security number. Your LLC is an entity. It has an EIN number. These are two different entities. If you buy as the person, then you are using the credit of the person and you are buying as a person. And banks, FHA, VA, Fannie Mae, Freddie Mac, USDA, a few others, they lend to a person with a social security number. They don't lend to a corporation with an EIN number. Now that's the difference between borrowing and titling. So let's say you borrowed under your name, Eric, you borrowed under your name, Eric, and you bought a $500,000 house. And then now you own it, but there's a lien on it from the bank. And you decide to transfer it over to your LLC. So you go down to the county recorder and you transfer it to the LLC. Well, wait a minute. The bank has a lien against that property, and inside of that note, there's something called a due on sale clause. And if you transferred it without the bank's knowledge and they get wind that you transferred it, and they will, they get wind, they have the ability to call the note right now, which means you owe all $500,000 right now because you thought it was a shifty move to move from your name to an LLC, which that's not. So you kind of need to really know what you're doing if you're talking LLCs and buying things regular, because an LLC is it's an entity, it's a corporation. And a lot of people like to say, hey, I'm an LLC, I'm the CEO and the CFO and the COO and the president. Okay, cool.
And the cleaning person.
And the cleaning person. So you can do all that, that's fine. But a real company like Apple Computers is a real company. Apple owns property. When Apple buys property, they don't ask for the CEO's credit no. Why? Because the EIN of Apple has a credit score. It has the ability to buy. It has assets. It has cash flow. It has 1120s. It has K1s. Actually, you wouldn't even use K1s now. It has 1120s or their type of tax return, whatever it uses, and that entity buys it, and they do not buy it through FHA, Fannie Mae, Freddie Mac, USDA, VA. So those are two different things entirely. And I see a lot of people confusing, hey, I'm the CEO. You don't understand. I'm like, okay, here's the real test of a company. If you went away for 3 years and didn't touch it, does that company still exist? Does it make income? If it doesn't, you don't have a company, you're self-employed. And that's a different situation. Not that that's bad. Shoot, monster respect for those of you that are self-employed, but you need clarity on the fact that you're not a CEO, a COO, a president, all this stuff. That's cute when you're talking at the bar or picking up girls or something like that. But in real business, if somebody walks up to me and goes, hey, I have Unstuck Inc. I'm the CEO. Well, if I actually believe it's a real company, first thing I'm going to do is put it in Google and find out, okay, cool, where's this corporation registered at? Oh, if you're the CEO, how many officers? CEO is Chief Executive Officer, which means you have multiple officers. You have a Chief Operating Officer, Chief Financial Officer, Chief Technology Officer, and you are the officer over all of these, including the president. So to throw the word CEO out is cute. But if you're buying real estate, understand if you're buying it under your name, then it should be your name. And if you transfer it, you could cause a problem. Anyway, went on a rant. You're up.
So where that really works is when you're buying houses cash, and it never hits you. So that's a different level, though. Robbie Grant, can you sell a home with a quitclaim deed? Is it worth the same?
Well, quitclaim deed is title. And yes, you can if you own it free and clear with no encumbrances. And if you own it free and clear, if there's some type of lien on it, property tax lien, a bank lien, roofer lien, mechanics lien, any type of lien on it, then you're going to have problems. And that's why the industry of title exists. There actually is titles insurance, and there's lenders title insurance and owners title insurance, right? Those are the two, lenders and owners. Why? Because the lender wants to be insured that there's nothing wrong with this title, that somebody didn't transfer it over and it can't even be sold. So they buy insurance on every loan to do this. And then the buyer wants to go, hey, listen, I kind of want the same thing. I don't want somebody to go, hey, this is a stolen house. Get out. I want my house back. So you actually buy insurance in the process to cover this.
All right, cool.
Okay, cool.
So, Black Titan, is it really impossible to buy a home with bad credit even though you have money?
So if you have money, there's a difference between I have money and I have an income. Real true story. If anybody who's seen this for a while, this is a true story. I have a friend of mine who went to Vegas, used to go to Vegas all the time. He's a realtor. Realtor makes $100,000 a year, good respectable income, good realtor, great realtor actually, a friend of mine. And he goes to Vegas and he wins millions, like literally millions. And he comes back and he's like, Lee, I'm so happy. I'm like, yeah, I'm so happy for you, dude. I'm a little jealous. I'm so happy for you. Good job. And he goes, cool, I want $1 million house. And I'm like, okay, cool, let's get you $1 million house. And then I go, okay, cool, here's the problem. You only make $100,000 a year for the last 10 years or whatever. And that doesn't qualify you for $1 million house. And he's like, yeah, but I'm a millionaire. And I'm like, yeah, so you can write a big fat check and you own the house. And he goes, Lee, there's got to be a way around this. And I'm like, he goes, I have like millions in the bank. There's got to be a way around this. And I said, all right, so here's something that we can do. So we took about $500,000 and we said, hey, listen, we're going to create a SPIA, single premium immediate annuity. And we're going to put $100 in my left pocket and we're going to immediately annuitize. And when we do, we're going to create a stream of income for 50 months. $500,000, $10,000 a month, 50 months. And now you're going to have a stream of income of $10,000 a month in addition to what you make as a realtor. Now you qualify for $1 million house. So the guideline says that I have to be able to prove that it's going for 36 months or more, 3 years or more. And it's actually a provision in the guidelines called depleting assets. I have an asset, $500,000 that I put into a SPIA. It is depleting, but it's coming out to me in a structured manner. And because of that, we were able to get this guy $1 million house. So what the loans look at is your income, not necessarily your money in the bank.
Okay, there you go.
A lot, right?
I'm self-employed, sole proprietor. I have problems getting a loan because I'm self-employed. And it's because of the way you file your taxes. And it's because you don't claim enough income. And it's because you write off a bunch of your losses or deductions, and then that bottom line is the one that they're using. But there's ways around it. There's non-QM programs. We're in a perfect time right now. If you haven't filed your taxes right now, getting in touch with us to figure out what it takes to get you into a home and how to properly file those. We can give you some advice on that. But that's the reason why. So you need to reach out to us. It's probably time for a commercial.
If you need a badass loan, call a badass loan officer. You can reach your badass loan officers at New American Funding. Chris and Lee are your badass loan officers. And for disclosure purposes, Lee's NMLS is 944254. Chris's is
1066958.
Cool. And this is going to disappear in 5, 4, 3, 2, 1. Bye.
Boom.
Kinger Nails says title is to protect the lender, not the buyer. Well, there is
Partly
lender's
right.
insurance and then there's buyer's insurance. You're actually in a good deal. You pay for both. And I know because I have to explain this when a real technical person goes, why is there so much for lender's insurance? Because the lender's requiring it in order to lend you the money. They have to make sure that this is insured. But why do I have another one for mine for buyers? Can I not pay that? I say, you can, but I don't know if I'd recommend that. That's like, hey, I'm about to go uninsured and the lender's the only one going to be made whole. So you're kind of correct. It does cover the lender, but there is a provision where it covers the buyer.
Eric Willoughby, just want to keep buying multiple flips, but at the same point, my debt will be more than my income. Yeah, that's upside down.
Yeah, you're gonna be in trouble. I'm no mathematician, but I can tell you that if your debt's more than your income, can't go very long like that.
Yeah, Robbie Grant, no lien, bought it from a tax sale. That's the one that said about the title, not. Wait, did he do title? What was Robbie's question?
I don't know, man. You got to keep up with this stuff. What's the problem here?
I don't even think Robbie asked a question.
Right.
I think he
Okay,
just
cool.
came out the gate like that.
All right, cool.
You spelled Kennedy wrong,
You came in
dumbass.
hot. Yeah, you spelled Kennedy. You spelled Kennedy wrong. That's the first one. There's 2 typos. Find them both.
They're called Easter eggs.
Find them both. Find them both. Find them both.
User
Hey,
4601.
by the way, that's good. User 4601. That's pretty cool. And when we first caught it, I said, you know what? If we leave it there, somebody's going to catch us. Why don't we put 2 of them and they'll stay there through the whole scroll and try and find the second. So this way we get better watch time and the algorithm likes us a little bit more.
So 4601 said
Yeah.
you talk like Liz Warren with all your arms flailing all over the place.
Dude, Liz Warren. Liz Warren. I love Liz Warren. Not really, but
yes, you
yeah.
do.
Yeah, I do. She's the school teacher.
Dude, Phenomenal Phil is
Dude,
an LO now.
School teacher.
Phenomenal Phil is an LO. Want to join the
Okay.
team, Phil?
Yeah. What's up, Phenomenal Phil? Hey, Phenomenal Phil, if you just started as an LO, watch us, watch a bunch of LOs, and then be careful because everybody has a vested interest to tell you something. This is a very complicated business. I will tell you that probably 90%, between 80 and 90% of LOs that start this business are out of it within 3 years. It's a difficult business. And you will see the guys who make $1 million a year. There's a lot of LOs who make $1 million a year. And that's because they understand the bigger system. And if you understand how the business works, not one thing, because here's the first thing that LOs chase is BIPs. You go to a broker and the broker's like, I'll give you 300 BIPs. That's a high commission for a loan officer. And you're like, heck yeah, I'd like to make a whole bunch of commission. But you don't understand that by doing that, you have to give your client worse rates. And when you do that, you're not going to get a repeat client. And if you're not getting repeat clients, then you are forever doing your first year trying to hustle to get new clients, because the truth of this business is once you've got a reputation and you've got a big book, your clients call you and they say, hey Lee, you helped me in my house 2 years ago. My sister wants to buy a house. Will you help her? That's where the real money is, but you have to really be good, know your stuff, provide customer service, and find that balance of I want to make a good living, but I got to also treat my customer good. Because you can make a lot of money in this business.
So we skipped Moises. We have to
Dude, you
answer
can't
Moises.
skip Moises? What are you
I'm sorry,
doing?
Moises. My
Dude,
bad.
you can't
That's
skip
on me.
Moises.
That's on me.
Cool.
I'll take care of
All
it.
right,
though.
you do it.
I'll take
All
care
right,
of
cool.
it. So he wants to know how much does it cost to refinance. Okay, so if you're doing a full refinance, that means we have to involve the appraiser, we have to involve the notary, title, escrow. So those are closing costs, okay? So when we go through this, the normal cost that I see is roughly about $2,600 in that range. But that could change for a lot of people because I actually put a file together right before I walked in here. And this person has a 40 loan to value, which means they're borrowing 40% of the total value. There's 60% equity in this home. That's a lot of equity. And in this situation, guess what we don't need? An appraisal. So that $2,600 goes down.
Wait, what?
Yeah, it's called, help me, a waiver. We got a waiver on it because the Fannie Mae, which is one of the GSEs, says we have a lot of houses in this area. We know that these values are very stable, so don't even worry about an appraisal.
Yeah,
okay?
because
So that's what happens in these situations, which drops
Appraisal,
that fee.
inspection waiver. Appraisal, inspection waiver.
Yeah,
Dude,
that's
I do.
good.
See, I got the technicals, man. I just put.
What does COE stand for?
Close of escrow or
What does APR
certificate of eligibility. Which one do you want?
So in this case, it drops from $2,600 down to $2,000, and there's
What?
other ways to get rid of it.
Wow.
Lender credit, stuff like that. So in theory, about $2,600, but it could change down a little bit. So there's that. Also, you guys should know that when your loan to value is so low, guess what else you don't need when you're doing a refinance in this scenario?
Occupant co-borrower.
Reserves.
Oh, good point. Yeah.
Yeah. So
Yeah.
Fannie Mae asks for reserves sometimes if your file isn't the best. They'll say, we want to see that you have 3-6 months worth of mortgage payments in your bank account. In this situation, they need none. So refinances are really going off right now, guys. Just kind of wanted to share that with you.
Reserve. And by the way, back to that 580 FICO that I started this whole thing with. If you have a 580 FICO, they're going to want reserves. And reserves, I tell them this way. Hey, if you lost your job tomorrow, can you make the payment next month? Because that's 1 month reserve. Well, what if it takes you 2 months to find a job? We need 2 months reserves. What if it makes 3 months? I need 3 months reserves, okay? So if the bank's about to lend you $500,000, is it unreasonable for them to kind of want you to have enough money to make the payment?
Yeah, I think
that's
so.
not unreasonable. That's very reasonable. So the lower your FICO score is, the higher risk your loan is. Because of that, they go, all right, if you lost your job, I need to know that you can make your payments.
Yep.
But if you have an 800 FICO score, that means you've been paying everything on time for the last 10 years or whatever. And they say, hey, listen, at an 800 FICO score, I don't really need reserves. You know how to pay your bills. You figure shit out. And maybe you call your mom, maybe you call your aunt, maybe you got a trust fund, maybe whatever, but you figure shit out. I'm not worried because of your FICO score. So that's one of the reasons that even though it starts at 580, I tell everybody, yeah, we can, and I will. But if we're going to work to get it higher, let's work to get it higher. And then the other thing is, how did you get to that low FICO score? And it's usually a whole bunch of 30-day lates. And, well, that was 4 years ago. Nobody sees it. No, the report, I actually take a look at it, and sometimes I send it to the client, and I say, hey, listen, it shows that you were 30 days late for 18 months in a row. You think that just goes away? Not for 10 years. It's going to be there, and we can look back at your history. We can see that you tried with Chase a year ago. We can see that you tried with Wells 2 years ago. We can see all the times you've tried to get a home loan. So when you start putting that story together and you send it to the underwriting going, no, I've never tried it before. No, it's there. It's always there. And every late that you've ever had, every time it's 30 days, 60 day, or 90 day, every collection that you have, everything that you tried to erase, it's still there.
Yep. Chili Pepper, LVWS, Sosa, we're going to get to you guys.
Cool.
Chili Pepper, can I buy an abandoned home if I pay the taxes?
Owed. Well, there's something called a foreclosure process. I've done this in New Mexico. I actually own a lot of raw land because I went in and about tax, and what happens is they owe $500 a month for this, $500 for the year for taxes. So I say, hey, listen, there's 3 years in arrear. Here's your $1,500. Cool. Now, they tell the owner, hey, listen, somebody paid your property taxes. You have the opportunity for the next 6 months to pay them back with interest. So they say, hey, listen, if you want to pay back your property taxes, you write this guy a check for $1,800. Actually, write it to us and we'll give it to the guy. And the guy made $300. But if you don't, we're going to foreclose and that guy's going to own your property. So that's called a tax sale, a tax lien sale. And you usually do have to cover the last 3 years, and it's got to go through a legal process, and it's got to go through the court. So it's not just as simple as I paid the property taxes for the last 3 years, so that's my house. No, the owner has rights, and it's going to have to go through a foreclosure process, and it's a little bit more complicated than that, but kind of yeah, kind of no.
Yeah. So here's the other thing, guys. There's a lot of people that own homes. There's a lot of people that buy these distressed houses and don't do anything with them. I'll give you an example. There's a guy that was really popular in the 90s, 1991 exactly. His name was Vanilla Ice. Okay?
I remember Vanilla Ice.
He now does rehabs. He's a contractor. So he actually will go out, find a good deal, buy it cash, and not even show up to the house. Not fix up the house.
Really? Not even show up?
Because he knows there's a lot of money in it, and
Yeah.
if he just needs to, he just sells it, makes a bunch of cash.
Yeah.
So he knows his stuff. He's a real good guy when it comes to knowing real estate. And he does it all over the country. So these houses probably have owners that don't give a crap about them. They're not going to give it up. They're not going to give you a deal. Don't stop. Look for those opportunities. LVWS. I was thinking about getting into my first home out in Las Vegas, Nevada.
Cool. We close loans in Las Vegas all the time.
We
I
do?
love it. Yes.
We do Las
I
Vegas.
love
You need
it.
to call
I love
us.
all 50 states. All 50 states. We're here for you.
Okay. Maxed girl. Oh, Sosa. What if you have 700 no missed payments ever? 700 credit is what I'm assuming.
Good. That's great news, man. You get that. You're kind of in the zone.
Do you think they would get a house?
It depends on your income, obviously, but
So
yeah.
if you had great
yeah.
income?
Great income, yeah.
Down
You're getting a
payment?
house. You're getting a house.
For sure.
You're getting a house.
Yeah. Let's get you a house, Sosa.
Yep.
Mixed girl goddess. How can my
Mixed
son...
girl goddess. Hold on. Mixed girl. I like that name. It's just a cool name.
How can my son finance a house for me and my name be on the note? I want to relocate.
Can my son finance a house for me, which means I'm buying it for Mixed Goddess, my son, mom. I'm buying it for my mom, and my name be on the note. I want to relocate. So what you're saying is you want him to finance it and you want to be on the note, so you're both financing, which means you're both borrowers. You can be a non-occupant co-borrower or an occupant co-borrower, but you're co-borrowers. That's it. We just finance both of you together, get the house going. Easy.
Okay. Double down. How long does pre-underwriting take for FHA?
Pre-underwriting? What is pre-underwriting?
A TBD, I'm assuming.
No, that's underwriting.
Well, he doesn't have a house yet, so I'm gonna assume that's what pre means.
Okay, so you're using a word here. I'll slice it up a couple of ways. Pre-underwriting would mean DUAUS to me. That's desktop underwriter, automated approval software. So that would take, once I have all your documents, probably a day, unless your credit score is too low or your job situation isn't 2 years and I have to figure out the job hiccups. If any of those things, but if I have all the documents and everything lines up, I can usually do it in 2 or 3 hours. Pretty simple. If you're looking for a TBD underwrite, that means that I'm going full underwriting. I'm going fully through underwriting. I just got to find the house. So that will take usually a week, about a week for TBD underwriting, because they have to do VOEs. They actually call your job, verification of employment. They pull CAVers on the back end. They pull statement of identity. There's a bunch of things that they pull in order to make sure that this is good. But then they actually sign off with an underwriter. An underwriter has a CHUMS number, a license number. And the underwriter states this is a good as gold borrower right now, fully approved. That's way better than a DUAUS. DUAUS is when the loan officer put in the data, but we didn't pull VOEs. We can't run the back end stuff like CAVers. We didn't pull the statement of identity. There's certain things that we can't do. We can't pull a 4506T to make sure that the transcripts that you gave us for your taxes are the exact same with the IRS. The underwriter does that. You will pull a 4506T to make sure that what you gave the loan officer matches up with what you gave the IRS. These are things that we can't do. So when we put it in based off good faith data, and we give you an approval to go shopping. If you go through an underwriter, the underwriter actually pulls this thing apart and you're fully approved. So they're different.
All right. Densdale, if I sign my pre-close documents, can I go shopping now? Pre-close documents.
I don't know what pre-close, yeah, I don't know.
Do you mean that you closed on a loan and now you want to go shopping for like furniture or a car? Is that what you mean?
Yeah, because your pre-closed document, well, first off, when you get an approval from a loan officer, he's probably going to reach out to your realtor, because it's going to be stuff that you don't understand. And he's going to say, hey, listen, here is a pre-approval along with page 1 of the DU. Why? Because the listing agent, if he's any good, is going to want to see the DU. And the DU is, did you put this in? So a lot of times I'll get a realtor that's really experienced and they'll say, hey, Lee, can you do me a favor and pull apart this DU? And I'll say, yeah, cool, let me see it. And there's usually like 12, 14, 16 pages. And one of the first places I'll go to is income, because if the income is too clean, if it's $3,000 a month, I know you didn't calculate income, you guessed it. And if I look at reserves, and the reserves are only 1 month, 2 months, or 3 months, I go, all right, this is starting to look a little fishy. It's starting to look a little fishy because very few people make exactly $3,000 a month. It's usually $3,013 and 24 cents, because if you calculated income correctly, that's what it should look like. But if you're roughing in income, you put $3,000, and I don't want to send somebody into escrow that is just guessing at these things. So they want to see the DU. So I don't know if you're talking about that's your and at that point you have what's called a pre-qual letter. A pre-qual letter comes from your loan officer and goes to your realtor, and your realtor uses that to offer on products, on houses.
Xavier, what is a good income? I make 60 a year and 120 combined income. What range for a house do you recommend?
Well, at that range, at that income level with no debt, you're probably starting at $500,000 and going up from there. One big factor will be property taxes. If your property taxes are real high, like I closed one in Texas a couple of days ago, property taxes 2.97, ridiculously high. We're also closing one in Northern California, I think today or yesterday. It's 1.2. So that big difference is a monthly payment difference of $300 at 1.2 to $1,000 at 2.97. So it's a big difference in payment, which reduces your buying power. So a lot of it will depend on the tax base of where you're at.
Pickle 667 rates are ridiculous on 15% DSCR.
Yeah, they are. They're ridiculous. They're never going to be good. On a DSCR, they're never going to be good. I mean, people get, like, they heard 3% rate, 4% rate. Those are great rates, but you're not getting that. You're
Nope.
not. No, not on a DSCR. Shoot, my last DSCR, I think I quoted 12.
Yeah, that was a long time ago though.
Yeah.
I think I did one.
9.
yes,
Yeah, I think
and a
nine.
half,
Yours
and
was
a half.
9. Yours was 9. I don't know, about 3 months ago that was 12. 12. But DSCR is a very unique loan. I don't have to know what your income is. I have to know shit. I just have to know that the property can debt service and you're putting enough money in to make it worth it for the bank. And then the bank gets 12% or in your case 9%.
Yeah.
And we shop them, by the way. It depends on the profile of the file in that case, not the profile of the person.
Okay.
DSCR rate loans? DSCR rate loans?
Yeah, so we asked the rate. We just went over it.
Yeah, anywhere from 8.5 to 15. So that's kind of the range, and it's gonna.
You can't give those ranges. You know why?
Why?
Because people get like, oh, what is it then?
Yeah,
It's too wide.
Yeah. It's like, it's crazy. Like, what is the interest rates today? Well, I can tell you a par rate for a perfect borrower, but that's probably not going to be you. If you want to know what the range is, it's probably 5.5% all the way up to 8.5%. That's going to be the range. Any loan officer who prices your loan is going to pull a matrix, and there's going to be the par rate, which is no cost, no benefit. But you can buy down all the way to 5.35, or you can get money back by going all the way up to 8.5. That happens on every single loan.
Mighty Mateo.
Mighty Mateo, not just Mateo.
I had to pause because
Mighty
you
Mateo.
know you get feels when you hear
Dude,
Mateo.
Mighty Mateo. Yeah.
640 FICO, 30K a year, and 650 FICO, and a 650 FICO, making 42K a year now. How much can we borrow? So 42K, 640.
Well, I don't know. They might be saying 32K a year and 42K a year.
I think they said they used to make 30, but now they make 42.
Okay, so what we used to make doesn't really matter. What we make now is what matters. So if we went off 42, you're probably starting $1.80 maybe $1.80, depending on your back end ratio, your car payments, your credit card payments, and whatever, and your property tax base. So what you used to make, that doesn't matter. But if you're saying both of them together,
Yeah,
that
that's
would
different.
be 72, and 72 would put you in the 340, 350, 360,000, depending on a lot of things.
Oh, it
so
is separate.
yeah,
So,
so
640, 30, 650, 42.
yeah, I
Sorry,
think
my bad.
yeah. Dude,
You
pay
keep
attention.
staring at me or what?
Pay attention.
Alphabatino. What number do I call? Heard about your help in New York. Dude, you're hearing about us in New York?
Dude,
Already?
we want you to be
Already?
our first loan in New York.
Man.
If you need a badass loan, call Badass Loan Officer. You can reach a badass loan officer at New American Funding. Chris and Lee are you want me to hide
It
your
has
face?
to be special.
Okay.
It's for all platforms.
Oh,
It's-
okay,
yeah,
got
that's
it.
why
Yeah,
I'm always
that's
weird.
right. It's different
I'm
on
always like-
Facebook, and it's because we're on Facebook, Instagram, TikTok, and YouTube, and they all look just a little bit different. But anyway, if you need a badass loan, call Badass Loan Officer. Screenshot this because it's gonna disappear in 5, 4, 3, 2, 1. We now do business in New York. About 2 weeks ago, we got the thumbs up for New American Funding to do business in New York. Super excited.
Mateo's in Chi-Town.
Shot-town.
Veronica Rubio. If I had worked 1 year on 1099 and transferred this year to W-2, can I still buy a home? Would be second home.
You take that.
Wow.
This is your
Second
specialty.
home.
Right up your alley.
Oh my goodness.
Do it.
Okay, so if you've had a 2-year work history, meaning you've done 1099 for a couple years, or you did W-2, then 1099 went back to W-2, we can absolutely use your W-2 income moving forward. Okay. Now, second home, same thing. That doesn't change anything. The only thing that changes on second home is you have to be able to afford it. Okay. There are other guidelines and stuff that we'll cover with you, like you need at least 10% down, yada yada. But yeah, Veronica, you're ready to go. You need to give us a buzz.
Val says, hello. What's up, Val?
Hello.
Great to see you. Great to see you, Val.
Brad Aiken, what LOS do you use?
Oh my God, Brad Aiken. Yeah, you're a nerd. You're a nerd, Brad. You're probably an LO
kidding,
too.
just
Hey,
kidding.
if you're an LO, we appreciate you being here. We really do. If you know more than us, please challenge us That's okay. Challenge us in the comments.
I'm a
Teach
bully.
us something.
Nerd.
Yeah, nerd. But if you're brand new in here, sit down. You might learn something. We appreciate you guys. We're pulling for you. We use LOS Encompass. We use Encompass, DU, LP, and Gus. Whoa!
Mix home.
And then what's our
2021.
pricing? What's our pricing? Optimal Blue, right?
No.
No, we just changed from Optimal
Yeah,
Blue
I
to
don't know what the new one is.
yeah,
We had
Poly,
Optimal Blue.
Poly.
Poly.
Yeah, Poly. We use Poly for pricing.
Mix home 2021 and the down payment, please.
And the down payment, please.
That's the 10%. Well,
10
who are you? What did you need?
I don't remember, man. You got to keep up with this stuff.
Yeah.
We got people that love we've got to answer your questions, man.
People are just
Facebook,
saying
Instagram,
stuff.
TikTok, and YouTube.
Sosa.
We appreciate all of you guys.
What
Thank
if
you.
you've only been at your job for a year? Would that be an issue?
Sosa, not if you graduated from school and you got a degree. So if you're a nurse and you've been there 1 year, no worries. If you're an engineer and you got a degree, no worries. If you went to mechanic school and you got a certificate or a degree, no worries. As long as I have 2 years of you in the industry in some form, I'm good to go. But if you didn't get a degree, we need a 2-year work history. That doesn't mean it has to be in one industry for 2 years. You could have been in a different industry and then you shifted to this industry, and then it's going to be case by case. We have to go from there.
Yeah, mine and Mateo, 2 hours. We figured that out. Only took us all day.
All took us all day, man. It's all day. We're super smart.
Aaron, 400K, 640 FICO.
400K, 640 FICO. You can do that today.
So you want to buy 400K or you make 400K? Because if you make 400K, you can buy whatever you want.
You're about $2 million, man. 40, yeah, 400K.
Vero, 40 a year. Is that too low to buy a house?
Depends on where you live. If you're in Los Angeles, way too low. If you're in Arkansas, not so much. You can buy something. So it depends on where you're at. I've closed the house on Arkansas for $160,000. Didn't need $40,000 for that.
All right. So Brad said he makes $1 cajillion.
A cajillion? Yeah. Wow, I don't even know where that goes.
But he only has a 317 score.
Oh, that's Brad.
So Brad,
too bad. Yeah.
Cash money's the only way to go.
Cash money, you just got to write a check.
Do you do business in Georgia?
We do business in Georgia. We do business in all 50 states. Used to be, we have to throw the disclaimer, we don't do it in New York. But about 2 weeks ago, we got blue skied, green lit in New York.
H. Leah said, you guys look like pastors.
Yeah, we are pastors. We want to pray. No, I don't want to do that.
Better than bastards.
No, we're not pastors. Yeah, we're not pastors. We're not pastors. We're not pastors. We're loan officers. And we help you get a home in 2024.
Hunt SAA, another nerd.
Uh-huh.
Calix is the best.
Calix is the best. Yeah, Calix is the best. I think they all suck.
Make 400K, Aaron. Are you serious?
All right, you make 400K, 2 million. 2 million easy. You're in jumbo property. Jumbo, by the way, let's talk about jumbo for a second.
Yeah, let's talk about it.
Conventional conforming is set by counties. So certain counties, like $766,000 for San Bernardino County, Riverside County. It goes up to $1 million for Orange County, Los Angeles County, San Diego County, and every county in Texas, whatever county. If you're in Travis County, it's different. If you're in Houston, wherever you're at, it's a different. But those are called conventional conforming loans. Those are regular loans. Then there's this category right above conventional conforming, in this case, 766 to about 940. And that's going to be what's called a high balance loan. High balance is between conventional conforming and jumbo. But the minute you get into jumbo, which is $1 million plus in most areas, $1 million plus, it's a whole different system. And jumbo, you can't get 3.5% down with jumbo. They're like, hey, you're buying $1 million house. You better have 10%.
Yeah.
Most jumbos want 20%.
Yep.
Now, we can do 80-10-10s on jumbos, and we often do, which means you bring 10%, we take a second note for 10%, and then Fannie Mae, Freddie Mac on a jumbo situation covers the 80%. That's called an 80-10-10. Do that all the time, by the way.
Yeah. Also, on jumbos, you guys should know this, all you jumbo players, is that we have a proprietary in-house jumbo product.
What?
Which typically outperforms, and it gets you a much lesser interest rate than all the others out there.
Lesser.
Yeah.
I like that. Yeah.
So we're in that being said, you need to call us if you're going to be a jumbo loan. You really do, because you probably get a better rate. Yep. Connie Jacobs Reyes. If I get a down payment assistance, does that make the APR go up?
Sometimes, Connie. Sometimes. The down payment assistance programs, they're not great. They're okay sometimes. I'll give you an example. The one that in California that's like everybody's talking about, commercials, all the loan officers are talking about, I'm going to tell you what it is. It's called the Dream for All program. And in the Dream for All program, they will get you $100,000. A $500,000 house, they'll get you $100,000. Sounds great. Sounds amazing. You're like, hey, thank you very much. You just started doing business with the state of California, because they didn't tell you they're going to give you the $100,000. They said they're going to get you $100,000. And now you and the state of California are invested in your house. And guess what? The state of California wants their $100,000 back. Not only do they want it back, they want it back with interest. No, scratch interest, appreciation. appreciation is way better than interest. So the state of California wants their 100 grand back, and they want the appreciation. Oh, by the way, they got first right out, which means if only one of you gets made whole, it's the state of California. So when you take that down payment assistance program, was it great? Maybe. If it means the difference between you not getting a house and getting a house, I say do it. But if you can do it without the down payment assistance program, every day, all day, don't do it. Do it without.
Okay, so Connie also said, do you know of any down payment assistance programs in Texas?
Oh, yes. There's a bunch of them. Here we go.
My primary is my negative. Go ahead. Do we?
So, yes, we have them in Texas.
Name it.
Do you know down payment assistance in San Antonio, Texas? Well, they're driven by the counties. The counties are, because Texas is so big, there's separate parts and separate counties that have to deal with things. So in San Antonio, I'd have to look it up, and we have to figure out if you make it for it.
Looking at $600K house, Aaron said.
All right, good.
$400,000 a year, $600K house? Slam dunk, man.
Yeah, dude.
What's your credit?
All day long.
You need to let us know your credit. We'll put you
all day long.
Angelica 7. I made $76,000 last year. 800 FICO. I have $200K saved. Can I get $750? House? I already have a house. What? So is this going to be a second property, an investment property? What is it going to be? We need more data.
Your loan is going to be in the neighborhood of about 330 to 360, maybe in that range. So if you add 200 on top of that, that's 530 to 560. So 750 might be a little bit out of range for you. And if it's your second, we got to deal with reserves.
Yeah.
So the reserves are a big deal on seconds.
So that first
second
house
home.
that you bought, that first second home you bought, was easy.
Yeah.
Second home or third
that's
home
harder.
You buy?
Yeah, that's harder. Yeah, you got to jump through some more hoops.
Yeah. Connie, do you know? We already read that one. We
already covered that, dude. JJ followed the host. JJ followed the host. We appreciate you, JJ. Leo just joined. Corverta just joined. We are on Facebook, Instagram, TikTok, and YouTube.
So
what else you got, man?
Okay, so I'm going to talk about the Kristen Lee 123.
Tell them about the Kristen Lee 123.
And this goes for you, Connie. This is just for you, girl. Kristen Lee 123 is this. You need 3 things to buy a loan. To get a home, buy a home. Finance. You need income, assets, and credit. Okay? Your income has to be enough, your assets have to be enough, and your credit has to be high enough. So what we've done is we've put a system together where if your income isn't high enough, we got a situation of where you can start a side hustle, make more money. 2, if your assets aren't enough, we have so many down payment assistance programs. It's insane. We have them all over the country, just for you, Connie, in San Antonio, Texas as well. And number 3, your credit. Credit's always the challenge, guys. For most of the buyers, the reason why they're not buying is because of credit. We've all been 18, 20 years old. We've all made mistakes. We've all let a person take out money on our, using our credit. We've all bought a jacuzzi and, went south. That being said, we have up top, if you go to our link where it says Stand.Store, a place where you can click that'll help you fix your credit today. So if you already know you have junk credit, don't feel bad. Don't give us a story. Just go straight to that link. Sign up. It does cost a little bit, but your credit will be better this year, hopefully, and get you into a house ASAP. So that's the Kristen Lee 123.
That's pretty cool. Hey, Vanessa says, how hard is it to buy a house on disability and pension? I actually get a lot of people financed on disability and pension. I deal with the VA is a very big part of our business because I'm a veteran, and I go to the VA and I talk to veterans all the time, and we got a big book of veterans. But we have a lot of veterans that are on disability and pension, and because disability is tax-free, I can actually gross it up 25% most of the time. 25. Social Security, same thing. I can gross it up 25% most of the time, sometimes 15%. But I do get people in houses on disability and pension all the time. And they're like, the next question is, well, I haven't filed my taxes in the last 2 years. I don't care. I know you haven't because you don't need to. There's a provision in the IRS that says if your income is not reportable, then you don't have to file. And then I just need you to show me that you don't have to file, and no worries. I just take I need award letters though. I need your Social Security award letter, your VA award letter, your disability award letter, and your pension award letter, not just your bank account. That's usually where we run into hiccups. They're like, well, can't you just see that I'm getting $3,000 a month? I'm like, I can see it, but that doesn't mean shit when it comes to underwriting. I need an award letter. So the next thing is I need the award letter, and once I have the award letter, I'm able to get you a house. Yes, we do it. We do it all the time.
So I'm going to follow up on that.
All right, good.
So Vanessa, I'm going to go out on a limb here, and I'm going to say it's easier.
Whoa.
Easier. I'll give you an example. Okay, so if I finance this guy,
all right,
he has commission, he has other businesses, he has rentals, he has investments, and blah, 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 which I know he could buy a house, but it's going to be so much more work financing him than you, because all I need is a couple pieces of document, submit those, money. So you need to get yourself a house.
It is simpler from that angle. I forgot about that.
Way easier.
Well, because like some people come in with like, don't you see my stocks are worth 100 grand? I say, yeah, but I can only use 75 of that. Well, it's 100. It says it. I'm like, yeah, but the guideline says 75% of today's prevailing market. I don't write the guidelines. I'll make the rules. I just interpret them. I can only use 75%. With that, you just barely make the reserves.
Okay. Thank you, Cassandra. Thank you, Carrie. Thank you, Vanessa. Thank you, A+. Bro, I make $100K and I can't afford a home.
Oh my God, A+.
Tell us, A+. Preach. Tell us where you can buy a home.
Preach on it. Preach on it.
I'll figure it out and we'll get you into one. Okay.
We look like
Vanessa, follow the host.
Thank you, Vanessa.
Followed in a Houston. Is that okay? Followed in a Houston?
Followed in a Houston.
Maybe she's saying she lives in Houston. Is
okay,
that okay?
yeah. If you're Houston, it doesn't matter where you live.
Houston,
if you
Texas,
if you have disability, it's nationwide. If you have Social Security, nationwide. And the FHA, VA, Fannie Mae, Freddie Mac, USDA, these are federal programs. There are some state issues that kind of overlay on top of it. Like, for instance, community property states. If I do an FHA loan in a community property state and you're married, I cannot put your spouse on it, but I do have to pull your spouse's credit and count the liabilities against your income on a community property state. Do I have to do it in a non-community property state?
Nope.
Nope. So that's the only little differences, but the loan programs are across the board.
Heck yeah. And Houston, Texas. So can you name a singer or rapper or anyone from Houston, Texas?
Whitney Houston.
That was pretty good. I don't think she's from Houston, Texas. That was pretty damn good. I didn't expect that. I did not expect. What about you, Vanessa? And I want to know, the rest of you, where you guys at? City and states. All the millions and millions of our fans and viewers, where are you guys located?
We appreciate you on Facebook, Instagram, TikTok, and YouTube. We are trying to help you get a house in 2024.
Lily, my son will be a first-time homebuyer, and he's single, ladies. What are the stipulations to purchase a home?
You go.
So, for your son, he's going to need 2-year work history. 2-year work history. Unless he went to college, I'll put the 4 years here, and got a degree to become, let's say, a teacher, and it's his first year becoming a teacher, we can still use this as a 2-year work history. But as long as he's had a job for 2 years, or he's been doing something for 2 years that we can prove, okay? We need to prove 2 years. That's first step. Number 2, his credit needs to be at least a 580. So if he's 18 years old, I hope you slapped him on one of your credit cards and his credit went like that overnight, okay? Because you could do that. And you need at least a 580, which if he's brand new, maybe he bought a car, maybe he has a couple of little accounts on his own, Macy's, that type of thing. Then the third thing we're going to need is assets, okay? Assets meaning down payment. They start as low as 3% down, okay? 3% down if you're paying the down payment. If he has credit that's good enough, let's say 640, 650, something like that, he'll absolutely be qualified for down payment assistance programs. We actually have an in-house that starts at 600. So those are the 3 things he's going to need. That's credit, income, assets, and like I told you guys,
600? 620.
600.
Really?
600 for
I
our
didn't hear about that one.
in-house.
Really?
In-house.
600?
In-house.
That means only New American Funding stuff. That means only New American Funding. That's not available to everybody else out there.
Yeah. So, and once again, I don't know if you heard about the Kristen Lee 123. We'll help with income, we'll help with assets, and we'll help with credit. If any of that is necessary, we got a path that you guys can walk down. So there's that. Okay. So what do you got?
I think we should rapid fire and then get going. We got some stuff to take care of. So any other questions? We got Tezo, you're welcome. Lily, thank you. You're welcome. Follow the host. Minimum FICO score for FHA 580. I can go down to a 500 if you're willing to do more than 10% and your credit doesn't have something. Do you guys help with closing costs? Yes, we do, Tezo, but it's not free. If you wanted to help with closing costs, I would take you from a 6.25 all the way up to a 6.75. Probably cover all your closing costs, but you're paying for it in the rate. Every lender is going to make you pay for it in a rate. Nobody is going to give it to you for free. If they tell you they're giving it to you for free, they're probably not telling you the truth. And I can pull apart the LE and tell you where they're not telling you the truth. Anyway, we are trying to help you get a house in 2024. We've been Chris and Lee. We appreciate you. We are out.